Gentlemen, welcome back to MGTOW Money. This, of course, is MGTOW 2.0. Today's topic, how not to be a market sucker. Before we get to that, thank you to the ongoing support from the Patreon investors in this channel. Men, keep the questions coming regarding personal finance, investment concerns, etc. Yes, I am answering them in order. Today's topic comes from one of those Patreon investors. And by the way, see the video description today, men. Become a Patreon investor. Thomas, one of those Patreon investors, is a man who is well on his way to success. He is clearing up his debts. He's acquired some precious metals. He is bolstering his 401k. Thomas, you are doing great, my man. You are doing absolutely fantastic. You are on the right track. Thomas is also, based upon what I'm reading, based upon his question, I'm paraphrasing, he's a newbie investor. He's already made a significant first step. He set up an account with Vanguard. Vanguard is a world-class mutual fund, ETF facility, etc. They do a great job. He is, though, Thomas is very concerned about losing money, about where to specifically put his money. He's concerned, I'm sure, because even I look at Vanguard. There are hundreds of different options to choose from, whether it be the mutual fund section, the ETF section, etc. In other words, he really doesn't have a good feel for where to begin, etc. He's almost looking for that hand-holding. I totally get it. So, before we get to what I told Thomas and what I'm going to tell Thomas in just a second, I'm going to ask you being a MGTOW, what would you tell Thomas to do regarding his investments with Vanguard? Now, please don't just make outlandish statements about how the stock market's going to crash tomorrow, etc. I'm talking about things that he can specifically do relative to handling his investments. And in particular, for someone who I'm guessing is very conservative, and again, getting back to the personality types, probably is an amiable personality type, and security of his capital is very important. So, I'll let you in the comments section put your comments, and I'm going to tell you what I suggest for Thomas. First, Thomas, go to the links in today's video description. I have done very basic videos on stocks, bonds, mutual funds, exchange-traded funds. I've tried to provide information that my grandmother might understand. Very basic, simple information. I think after you listen to those videos that you will already know more than 96% of the entire world population relative to investments. I can promise you it's not that difficult. Furthermore, I want you to read one book. One single book. There are thousands of books to read on successful investing. The only book that I want you to read, again, I'm going to include a link in the description, is the one by Harry Brown on fail-safe investing. It's a very short book. It's a simple book. It basically tells you, again, everything you need to know. You really only need to know 20% about investing, and that'll cover approximately 80% of all your questions. Next, since you referenced that you're using Vanguard, which is great. They are a terrific mutual fund, ETF provider, etc. Well-known, great reputation, low cost, low expense ratios, etc. They are a great choice for a newbie provider. What I'm going to recommend is one that you call them. I have dealt with them in the past. I don't deal with them now, but I have in the past. They do a great job, honestly. They have an excellent customer service group. Furthermore, I'm going to recommend, again, because I have a suspicion that you're looking for something that's very conservative, that's not going to be up 20% and down 30% tomorrow, that you're looking for something that's relatively stable. I'm going to give you some ideas. Start considering categories, investment categories, mutual fund categories that are in what are called the balanced category. These funds, these mutual funds, are a mix of stocks and bonds. In other words, if stocks go up, bonds go down, and vice versa. That's theoretically how it works, and that's generally how it works. I'll give you an example. The Wellington Fund that Vanguard manages has been around since 1929. Yeah, you heard me, nearly 100 years. That's one example of a mutual fund, a balanced mutual fund that you might want to consider. It's not going to hit you a home run, but you're not going to be absolutely destroyed if you're investing in it. Another idea that you might want to consider, again, is an index fund. Specifically, I'm going to recommend you might consider their all-world fund that excludes the United States. This is very important. The all-world fund that excludes the United States. The only reason why I'm recommending that is because, generally speaking, outside the United States, markets are very, very, again, relatively speaking, undervalued relative to the U.S. markets. And I'm measuring that by the CAPE ratios. All right, let me just give you a third idea. I'm not going to go into all the particulars here. You might also consider Vanguard's Global Minimum Volatility Fund. Again, this would give you some international exposure, but it would also give you some national exposure, some U.S. exposure, because I presume that you're based in the United States. Again, these are simply ideas. You're going to do your own research. You can decide for yourself. But furthermore, going back to what I said before, you're going to listen to the videos, you're going to read the book, you're going to call Vanguard, and they, of course, will assist you. Next. Although I've thrown out a few mutual fund ideas for you to simply research, for you to consider, for you to educate yourself on, I'm going to recommend today, at least for the short term, you consider just putting money into a Vanguard money market fund. A money market fund is effectively a bank account. It's simply a cash account, if you will. Although the rate of return is low, in other words, you might only get 0.5%, maybe 1% in terms of the yield on your money, the interest rate that you're being paid. Now, in my opinion, my amateur personal opinion, now might be the time to, again, simply stockpile cash. Simply be a little bit patient. There's no reason to rush into anything. As I've mentioned numerous times in the past, go slow, and if in doubt, stay out. There, especially today, in today's volatile market environment, again, there's no reason for you to rush in with all your money in anything. You might want to wait to see if the markets sort of go on sale, if you will. In other words, if we see a 10 or 20% decline. Furthermore, I might point out in general for markets, we're entering into a period starting in early May where seasonally it is not, again, historically speaking, generally a good time to be in the stock market. From the early May till late October, generally speaking, worldwide is not a good idea. Having your money in the stock market is generally not a good place to be. So again, what I recommend for Thomas is that he simply continues to stockpiling cash in a Vanguard money market fund. All right, quick summary here, men. Anyone can easily and quickly learn the 20% of stock market, bond market, and investing that'll cover pretty much 80% of their questions. I can promise you, I can tell you this for a fact, you do not need to be some sort of stock market guru. You do not need to be able to predict the future to be a successful stock market or bond market investor. If you'll simply get a few things right, you will do overall in the long term very well. Watch the videos in the video description. Read the book that I include in the video description. 2, you do not need to go all in on stocks, whether it be one stock, one mutual fund, one exchange traded fund. You can go into something called a balanced fund. One click does it all for you. Just one investment can put you in a nice mix of stocks, bonds, etc. They can diversify it, not just within domestic stocks. They can also include international stocks. Again, one click. That way you can put your money into it and just forget about it and let the professionals, the professional money managers, handle it for you. And again, fortunately with Vanguard, they do have low expense ratios. 3, cash is not trash today. I can't emphasize that enough. And this is especially true in the United States with increasing interest rates, Australia, Canada. Piling up money, stockpiling cash is probably a nice strategy for anyone today, especially if you're a little bit concerned about the markets, if you're a new investor, if you're a concerned investor, if you're really, man, I don't want to lose any money type person. I get it. It's okay. Go slow. If in doubt, stay out. and just keep stockpiling cash. It's okay. Put your money into a money market fund, for example. I virtually guarantee you, if you're not sure about something, again, there will be some awesome investment opportunities to make you 3, 4, 5, 600% on your money in the future. I can't tell you exactly when, but I can tell you they'll be there. There is no FOMO. Do not have a fear of missing out. The markets will always be there. However, the key, of course, is you're going to need to have money to put up when those opportunities come forth. And when you've got the money, you can achieve the rich life that you deserve. Men, hit the like button if you found this useful. As always, John Galt out.